This is the Real Estate Guide to Success video series. I'm Vance Poindexter. I'm here again with Ronnie Adams.
Yeah, good morning. Good morning.
Good morning to you. Today we're going to be talking about the 5 most important people in your real estate investing business. We'll start out talking about the real estate agent. We're going to move to the mortgage person.
Yeah.
Then we're going to go to the contractors that fix your properties.
Yep.
The tax man.
The tax man.
Call him, right?
The tax man, you got to call him.
And most importantly, you. You are the most
Yep.
important person in your business. We're going to talk about the involvement of all those folks in your business.
Yep.
Starting with the real estate agent.
The real estate.
Your best friend?
Your best friend.
I'm supposed to be your
That's what I
best
said.
friend.
That's what I said. Okay, all right. But dealing with the real estate.
Oh. The real estate
You know
best
what?
friend.
All right, second best friend.
Okay.
All right. But anyway, the real estate agent is who is going to put you in front of that property that you need. That's what, so his responsibility is really first on the forefront for you getting the property. Okay. So he needs to be looking out for your best interest for what type of property he already knows or she already knows that you're looking for.
Right.
They need to even know what type of property would be a decent deal. Don't show me properties that are going to waste. Yeah, exactly. You know, something that is not it's going to waste my time.
So to do that, for them to know that, you guys have got to.
We have to have a relationship.
You got to talk.
We have to talk.
Present what you think you need.
Exactly.
They go out and find
they will learn what is going to be something that's good for you. Right. You know, so that's why that real estate agent, you know, they're real important.
Yeah, they're up front, right?
They're right in the beginning. You know, this is they come after our ebook, after our planning, our mindset, they come after that.
Gotcha.
But they are the most important. They're the next step.
Okay.
They're the next step.
So after that, we start talking about getting money to actually buy that property, right?
Yep.
Financing guy. How do they fit into the mix?
Your mortgage company is much like your realtor. He or she already knows what type of mortgage would be, financing would be best for you.
So do you go to them saying, I have this kind of property, and then they figure out what the best kind of deal is, or?
Well, you know what? They would be looking more for not the type of property, but what's the dollar amount.
Okay.
So they're going, exactly. They're looking at dollar and cents. So they're saying, okay, this particular property, the dollar amount is XYZ. I already know, Ronnie, hey, you may have to pay a little bit higher on the interest rate, but I know that you don't have to put hardly nothing down on this particular property. Okay. Now, the interest rate hike that you're going to pay is, it's only going to increase your payment by X amount of dollars. He already knows, or she already knows, that I can raise my rent to compensate for that. Okay. And some of the programs that they run, to be perfectly honest with you, is almost like going out buying clothes, where they may have a sale. And they'll have certain types of programs that they're going to run for a certain amount of time. Okay. So he's going to give me a call, or she's going to give me a call and say, hey, this is a good time to be able to get some free money. So that's what they're going to do.
So it doesn't matter if it's necessarily a single family home, a townhouse, a condo, or whatever. They're really more concerned about, how do I get you funding for this amount of money?
Well, I would say that, once you start getting condos are different. Okay. Financing is different for condos. Okay. Single family homes, multifamily homes, it's a little bit different.
Define multifamily home. What does that mean? Like a
multifamily home would be a unit that houses multiple addresses. Okay. So we may have one building that has 4 different addresses there, which would be 4 different units.
I understand.
But I'm going to get a loan for all of them at one time.
Because you wouldn't get a loan for just one?
No. Okay. Because generally on the tax certificate, it probably has one address. Okay. For the building.
Covers all.
Yeah. So, but that loan officer, he needs to know that this is type of apartment type thing or
I see.
something like that. So they would need to know if it's a multi-unit type deal. If it's a single-family home is going to be townhouses, row homes. There's still single-family, there's still one residence.
One unit, yeah.
And so he needs to know if it's a condo. Condo stuff for insurance is going to be a little bit different also. So they would need to know that. But their primary what they look at is the dollars. Okay. Right. How much is this costing? I'm trying to give you the best interest rate, and I'm trying to make it so that you have the least amount of money down. Generally, a investor, at least with myself, I'm cool with going 30 years. If I can go 40, if I can go 60, I'll go 60.
Why? We'll talk about why.
I will go 30-year mortgage. Opposed to a 15-year mortgage or a 20-year mortgage, you're going to drop your payment. So the longer the term that you go, the smaller your monthly payment is.
Which is more profit you'll have.
More profit. So if my monthly payment has to be $500 and I got a tenant paying $1,000 and I made a $500 profit. But for that same amount, if I can go 10 more years, and now they do 40-year mortgages. Wow. So if I can go 10 more years, instead of that payment being $500, it may be $425. Now I'm going to make extra $75. Yeah. So I don't have a problem going longer, because to be perfectly honest with you, I'm going to make the money, and I'm not going to hold the property for 30 years and actually pay it off. Right. Why? Because this is not a property I'm living in. It's not my personal property. Mm-hmm. So most likely, even if I kept the property for 30 years, I'll probably refi it. Mm-hmm. If I refi it, I'm probably going to go the longer term. So I'm not really concerned about how long the term is. I'm concerned about what my profit margin is for that monthly rent.
All right, before we get too far off of the 5 most important people, I want to ask more questions since you brought it up. Mm-hmm. The difference in qualifying for a 30-year versus a 40-year. What are they looking at?
It's it's pretty much the same. Okay. It's just that not all lenders offer the 40 years. Right. Your interest rate may be a little bit higher on the 40 years because now you're going longer than what the than what the regular term is. Okay. So you do pay a premium for that, but as long as it drops your payment, then that's fine. Yeah, it's more than fine.
All right. Next, we're going to talk about the contractors. What do they mean to your business? Why are they in the number 3 slot for the most important?
The contractors, and we haven't talked about contractors for a little bit. Your contractors, they are a very important asset because they're going to save you money, and they are also going to make sure that they're going to take some of your headache away. Okay. You're not going to go fix up the house, hopefully, but then again, in the beginning, I fixed up the houses, but if I can get a contractor who's going to give me a fair price, then I have no problem using him. Okay. I want to be able to buy a property and know that, okay, Vance, you take care of my plumbing. Yo, Vance, go over and take a look at the house. Here's the key. I'm not chasing you around, and I know that you're going to give me a fair price, and then you're going to tell me, Ronnie, it's going to cost X amount of dollars, and I know you're going to do what you need to do.
How do you know what a fair price is?
Oh, because you start in the beginning, you get screwed. So then, when you first meet the person, then they're going to give you a high price because he doesn't know you.
So it's like,
it's
you get 4 estimates for, like an individual will say, I want 4 estimates to come fix my bathroom.
Yeah, exactly.
You have a high, couple in between,
and a
low.
Yeah,
right? So
exactly.
From there, you understand what the price should be.
And know that just because it's the low price doesn't mean it's the best price. Right. So we have to, that's where we really have to know. Like, I just had a tenant. Was a house, a particular property, and I just text my guy, hey, the roof's leaking, go up, take a look at it. I don't have to show up to the house. He went up there, he took a look at it, and he sent me pictures and said, Ronnie, this is going to cost about $1,200. So, of course, I'm looking at the pictures. He had to change the skylight, and I wasn't sure if he was actually changing the skylight. So I said, price a little bit steep. Is that the best you can do? He said, "Oh, well, I'm changing the skylight." Once he told me he was changing the skylight, then I'm like, "Okay, I understand."
You know, not a problem.
And I trust that he, you know, and I know that once I pay him, I don't ever have to go to the house.
Yeah.
I don't ever have to check on it to make sure he actually did it. It's good. That's a headache that's going.
Yeah.
Now, that $1,200 that I paid him, I know that it's going to take me probably 2 months to recoup that money off the rent. But that roof is fine for the next 5 years.
Correct.
So I don't have a problem with it.
Excellent, excellent. All right, next up we have the tax man.
The tax man.
Repairs,
Ooh,
right? So
yeah.
repairs,
Well, you know what?
Off,
Look at this. We have our realtor. He's going to charge a certain amount of points. Those points we can write off on our taxes.
The real estate person.
Yeah, really? Yes. If you have anything that you put out that you have to pay into that property is going to be what they call a write-off.
Right.
So there is a spot on your taxes that you can list those items. Points,
commission for the real estate.
Commissions for the real estate.
Okay,
That's what you can end up doing. When you go to your commissions for the real estate. I was jumping ahead. Exactly. I'm jumping ahead. When you go to your loan office or your mortgage guy, that's where you're paying the points or whatever you're paying. Now, that's still monies that you're putting out on the house, you know. And then when you get to your contractor, everything that he charges you, then
labor,
materials. Because remember, he's not saying, even though he may break it down, labor and materials, as far as your tax man is concerned, you put X amount of dollars out on this particular property that you own. Okay. So your tax man is going to make sure that he gets all the write-offs you can, so that your bottom line is going to be, how much profit did you make? How many write-offs did you have? And what's your taxable income?
Right.
You want to reduce your taxable income is the total amount of money that you brought in. Then you drop that taxable income by how much money you put out.
Right.
Now, your tax man also is going to know what they call depreciation. Depreciation of a property, you get a certain amount of depreciation over a 20-year, whatever the years may be, 30-year period, whatever. But some things that you purchase for a house, like a stove, then they depreciate over a certain amount of time. Depreciation is amount of money that you get to write off to drop your taxable income that you actually don't put money out for.
Gotcha.
So that's what you need a good tax man,
right,
to be able to know.
And that's important.
Exactly.
Because what they can write off and what they cannot.
He keeps money in your pocket.
Right.
He's actually income to you.
Yeah.
You know, that's what he is.
So that's important. You're going to pay this person a good amount of money, but they're going to save you more.
Oh, they're going to save
by the
you
service
more.
They provide
Yes, most definitely. It doesn't matter how much money you make; it's only how much you keep.
Right.
That's the only thing that counts. You know what I mean? At the end of the year, how much did you keep in your pocket?
All right.
You know?
So wrapping up, we got one more to go. The most important person in your real estate investing business
is you.
Is you. Why? So you're the visionary. You're the person that has to get up and make the phone calls. You know, work with the agents, work with the mortgage people, work with the tax people. You're the most important person. And it's your responsibility.
You have to look at it as, I look at it as an octopus. Octopus has 8 arms, 8 legs, tentacles that come out. They work independently of each other. But if that head doesn't do what it's supposed to do, then
it doesn't matter.
Only thing you got to do is cut his legs off, and see what happens. Nothing.
Right.
So you are the most important person in your business. You have to know that when the times get tough, no one else is going to help you.
Who cares? Who else cares?
They don't. You know, anyone else would say, keep a job. Stay there. You know, they'll pay you on Friday or every other Friday, and then you have to deal with whatever you have to deal with. But why not? Here's the whole thing. Some people can work for a real estate agent, go out look for properties for other people. Why not do it for yourself?
Yeah. That's crazy.
You know, so you could work for a mortgage company, giving them someone else loans. Why not do it for yourself.
Right.
Why? Because you're because you're not the most important person in your business at that point. Yeah. So if you decided that you want to have a job, which is nothing wrong with having a job,
sure.
But if you say, I want to do this, then at some point you have to make the decision that everything is going to fall on me. But remember, half of the time I do the things in my day-to-day that I would have to do anyway. Yeah. So just go out and, do it for yourself. You're in charge, and you're going to reap the benefits.
That's right. All right, wrapping up. If you thought this was some good information, please check out our free real estate investing guide, beginner's guide at www.realestateguidetosuccess.com/free course. It's a free email course you can get. It talks about all the beginning items you need to be concerned with and focused on. And we'll see you next time.
All right now.
Thanks.